Most people treat their tax planning backwards. They treat their taxes like an unavoidable expense instead of what they really are, a controllable expense. Tax planning isn't about loopholes, tricks, or trying to game the system. It's about understanding that while the Income Tax Act may be absurdly complex, your decisions about optimizing your tax situation shouldn't be. And regardless if you're a business owner, a high-income professional, or quite frankly, any Canadian taxpayer, if you ignore the provisions set to you and provided to you in the Income Tax Act, then you're simply voluntarily willing to overpay the largest expense of your life. So just how important is tax planning? Just think about what Albert Einstein called the eighth wonder of the world: compound interest. If you invested in an income-producing vehicle and ignored the tax factor in that investment, you could be giving up the majority of those returns to the government over time. So let's dive into some of the realities of tax planning. Number one is that tax planning shouldn't be considered in isolation. In Canada, the Income Tax Act is massive. It's thousands of pages long, written in a language that only tax planning lawyers and accountants really enjoy reading, and even then they don't. But here's a key insight. Tax planning shouldn't be observed in a vacuum. It's not a separate part of your life. It's literally embedded into every financial decision you make. Things like how you pay yourself if you have an option to either take a contract or an employment salary, or a dividend or a T4 income, how you invest, how you use debt, how you create wealth, how you structure a business when you start, how to exit a business when you stop. All these decisions, and literally every single decision that you make financially, carries a tax consequence. So here's the deadly punchline. If every decision that you make carries a tax consequence, then ignoring those consequences might carry a penalty that you do not even see. The second reality of tax planning in Canada is that it is legitimate and legal. Legal planning strategies can be used to either defer or reduce your overall tax burden. Now, to be clear, effective tax planning is not the same as tax evasion, where somebody purposely misrepresents or omits information crucial to your return. Under Canadian law, you are legally allowed to choose an option that is either permitted under the Act or not specifically prohibited under law. However, it should be noted that aggressive tax planning, which may not be in the spirit of the Act, could get caught with CRA's main weapon, the General Anti-Avoidance Rules. Now, these rules, commonly known as GAAR, can catch all transactions where the specific objective was to obtain a tax benefit, not just being one of the primary purposes of the transaction. To be clear, a transaction isn't one of avoidance just because it provides a tax benefit, but it will be considered an avoidance transaction if there's no other economic substance to it. Now, this does not throw out the famous Duke of Westminster case, where in that ruling, the English House of Lords stated, people are legally allowed to structure their affairs in the most tax-efficient way. Now, if you're looking for more information about the General Anti-Avoidance Rules, please check out my video that I published a few months ago called CRA Secret Weapon. Now, tax planning should be really undertaken with professionals who are certified and qualified to provide tax advice. This isn't just about having an accountant, this is about having the right accountant. Many accountants are involved in filing taxes or audit and aren't qualified or simply don't provide tax advisory services. However, there are instances where an accountant will also provide tax advice services and not just file your returns. Now, depending on the complexity of your situation, tax lawyers, estate planners, and financial planners may also need to be involved in order to create a holistic approach. The third reality about tax planning is that taxes are an expense that you can adjust. Many Canadians look at taxes as this immovable mountain, but taxes are a utility cost, just like labor or rent. It's an operating cost that can be reduced with the right planning. And as I mentioned before, there's provisions in the Income Tax Act that can help you legitimately reduce or defer your tax burden. Think about this like a business. Tax planning is no different than expense management. You wouldn't overpay for supplies. Where you can avoid it, you wouldn't pay the same staff worker twice. You wouldn't light money on fire just because it's easier. In fact, most people would prefer to get something on sale. So with that mindset, why not apply it to tax? Now, I believe that one of the reasons that people don't apply that sale mentality to tax because they think it's too complex. And quite honestly, most tax planning comes down to a few things: choosing the right structure, choosing the right timing, choosing the right flow of income, and choosing the right tools. This can include trusts, insurance, dividends, credit, and other things. Sure, the Income Tax Act might feel complicated, but your tax planning doesn't have to be. The most complicated part about tax planning is it doesn't rely on a definitive set of rules. To every situation, you may have 2 or 3 right answers. And with the choice of answers carries a variety of consequences. And these consequences, whether they are intended or unintended, will either pull you farther to or farther away from your objectives and goals. By using professionals, you can understand the consequences to make better informed decisions. The fourth thing about tax planning is that it shouldn't be the only thing. It has to work in an overall environment of your objectives. Essentially, it shouldn't be the only factor, but it should be a major factor in your finances. Now, here's where people can get tripped up. Some people ignore tax, and other people obsess about it. Now, both these paths are not necessarily healthy or good. If you make decisions only and purely for tax reasons, you may end up with a structure that may be heavily complicated. You may lose your liquidity, or you may end up with a strategy without any flexibility to it. On the other hand, if you ignore tax, you can burn through these expenses. It will compound inefficiency and possibly destroy generational wealth in the future. The right approach is more of a balanced approach. Just like you evaluate return on investment or risk, cash flow, legal structure, operations, succession planning, long-term growth, budgeting, you have to include the evaluation of tax. And good tax planning isn't reactive, it's architecture of being proactive. Now, there is simplicity on the other side of complexity. As Oliver Wendell Holmes once said, "I wouldn't give a fig for simplicity on this side of complexity, but for the simplicity on the other side of complexity, I would give my life." And tax planning works exactly the same way. At first, everything seems complex, like the Income Tax Act is a maze of rules and regulations. But with the right guidance from a tax advisor, a tax lawyer, and a strategic planner, you'll reach the far side, where simple, well-structured decisions can create clarity, control, and efficiency. And that is where real wealth is built, not in the loopholes, but using the act and the provisions within it to your benefit. So in closing, remember, tax planning isn't made in isolation, it's made in integration. Taxes are an expense, and that's an expense that you can control. The Income Tax Act is somewhat complex, but your solutions to it don't necessarily have to be complex. Tax shouldn't drive every decision, but it should certainly influence them. And if you can control the biggest expense of your lifetime, you can control the outcome, reaching your objectives faster and more efficiently. If you enjoyed this journey, make sure you hit that like button, subscribe, and hit the notification bell. And stay tuned for more videos on politics, philosophy, financial literacy, economics, and history.